Listen, something massive just went down yesterday that almost nobody is talking about yet. The Vice President stood at the State Department in front of diplomats from over 50 countries and made an announcement that could fundamentally reshape the entire silver market. He didn't say they're thinking about it or maybe considering it. He flat out said the United States will guarantee minimum prices for critical minerals. And here's the kicker. Silver officially made that critical minerals list back in November 2025. Let me break down what this actually means for you. If you've got silver stacked away somewhere, whether it's in a safe, an IRA, or those American Eagles you picked up years ago when people thought you were nuts, pay attention. The second highest ranking official in America just announced to the world that the government wants your metal to be worth more, not less. And here's how they're going to do it. Tariffs that adjust automatically. So if China or any other country tries to dump cheap silver onto the market to tank prices and destroy your holdings, the US government steps in with tariffs to prop the price back up above a guaranteed minimum. This isn't some rumor I saw online. This actually happened on camera on February 4th, 2026 at the State Department with the whole world watching. I'm going to walk you through what this means for physical metal, what it means for the paper contracts, how this affects the big short positions, and whether we're actually looking at 4-digit silver prices or if that's just wishful thinking. But before I get into all that, I want to show you something that made me realize this was coming. There's something so fundamentally broken in this market that I'm honestly shocked the whole thing hasn't imploded already. Let me give you Vance's exact words, because the specific language here really matters. He said, and I'm quoting directly from the ministerial, "These reference prices will operate as a floor maintained through adjustable tariffs to uphold pricing integrity." Then he continued, "We want to eliminate that problem of people flooding into our markets with cheap critical minerals to undercut our domestic manufacturers, because we know, of course, that as soon as they have undercut our domestic makers, they leave the market, and the people who undercut them then jack up the price to a completely unfair level." Think about what he just laid out. The Vice President publicly described a strategy where tariffs become the enforcement mechanism to stop anyone from selling critical minerals below a set price point. That's literally describing a price floor. And there's more. He announced the US is creating a trading alliance with partner nations to guarantee American access to industrial capacity while boosting production throughout the Allied zone. The Interior Secretary Doug Burgum said 30 countries already want in. This isn't some mid-level bureaucrat putting out a statement. This is America's number 2 telling 50 nations that we're building an economic bloc specifically designed to control pricing on the metals that power modern civilization. Silver is explicitly included. Now here's where it gets interesting, because the media narrative last week was the complete opposite. On January 30th, Reuters ran a story saying the administration was walking back price floors for individual companies. The headline suggested the whole concept was dead. Australian mining stocks tanked, silver investors freaked out. Everyone assumed the plan had collapsed. Turns out that whole narrative missed the point. What actually died was a narrow approach, cutting individual deals with separate companies one by one. That method was slow, expensive, and politically complicated. It was never going to work at scale. What got announced today is entirely different. This isn't company-specific deals, this is a systematic framework. Tariffs get applied across a whole trading block. When global silver prices fall below the reference point, tariffs automatically activate to push import prices back up to the floor. There's no need for congressional appropriations, no drawn-out negotiations with individual businesses. The tariff mechanism handles everything, and the president already has legal authority to implement it under Section 232, which got signed January 14th, declaring that critical mineral imports threaten national security. So while the media declared price floors dead, a much bigger and more powerful version just got born. The market hasn't processed this yet. When it finally clicks, we could see something historic unfold. But let's talk about why the government is even doing this, because understanding their motivation tells you everything about where this is headed. November 7th, 2025, the United States Geological Survey did something unprecedented. They added silver to the official critical minerals list. This had never happened before. Not when the Manhattan Project borrowed 430 million ounces from national reserves to build atomic weapons during World War II. Not during the Cold War. Not during any previous crisis in our history. Silver is on there now, classified at the same level as uranium. Getting that designation unlocks federal funding, expedited mining permits, stockpiling powers, and yes, the ability to implement price floors, all justified under national security. Before I explain why this matters so much, I need you to remember something because I'm circling back to this later, and it's going to change how you see all the numbers I'm about to share. 5 different government agencies, including defense, stopped publicly reporting military silver consumption. They went silent in 1996. No explanation was ever given, just radio silence for 30 years now. Hold on to that thought. You already know silver consumption is through the roof. Solar installations, AI server farms, electric cars, military hardware. Demand is exploding while supply can't keep pace. Those stats have been covered to death, so I won't rehash them. Instead, let me hit you with the number that isn't getting enough attention. 820 million ounces. That's how short supply has been over the past 5 years combined. 5 straight years where global consumption exceeded production. 820 million ounces of deficit. That equals 10 full months of every silver mine on the planet operating at maximum output. Here's the problem. 71% of silver comes out of the ground as a byproduct of copper and zinc mining. That means even if silver prices skyrocket, you don't automatically get more silver production. There's no emergency valve to turn. There's no quick solution. And the people making these decisions just acknowledge that reality. That's the real reason behind today's announcement. But there's an even more dangerous number lurking beneath all this, and hardly anyone is focused on it. 356 to 1. That's how many paper silver claims exist for every ounce of physical silver backing those claims. People mention this ratio all the time, but most don't grasp what a government-imposed price floor does to that equation. Currently, the futures market works because both sides think they can profit. The long positions expect prices to rise. The short positions expect they can either push prices down or keep rolling their contracts forward to avoid actually delivering metal. That dynamic equilibrium keeps the paper market functioning. But what happens when the United States government announces it won't let prices fall below a certain threshold? If you're holding a short position, your whole strategy depends on prices dropping. That's your profit mechanism: sell high, buy back low. Except now the government just told you they'll use tariffs to prevent prices from falling past the floor. Your downside as a short seller just got capped, not by market forces, by government policy. So your maximum potential profit is now limited to whatever gap exists between current prices and the floor. Meanwhile, your maximum potential loss stays unlimited, because prices can still climb as high as supply and demand dynamics push them. That's an awful risk-reward profile. The major banks running these concentrated short positions absolutely understand this. Right now, there are enormous concentrated short positions in silver on COMEX. These positions have existed for years. They've been used to manage and suppress prices whenever they start getting uncomfortable for certain players. Those positions just became dramatically riskier to maintain because the government announced it's defending against price declines. The shorts are now positioned against the United States government. If those shorts begin covering, meaning they start buying silver to close out their positions, that 356 to 1 ratio doesn't gradually unwind. It breaks. And there isn't nearly enough physical metal sitting in vaults to handle that kind of demand. COMEX registered inventory has dropped 70% since 2020. The London Bullion Market Association lost around 40%. Shanghai's stockpiles are at their lowest point since 2015. The silver simply isn't available. It got consumed and destroyed in solar panels, data infrastructure, and weapons systems, and it's gone permanently. China just made the situation worse. January 1st of this year, China imposed new export restrictions on silver. Only 44 companies got approved for export licenses. Hundreds of smaller refineries are now blocked from exporting. China controls somewhere between 60 and 70% of global refined silver supply, and they just restricted the flow. Their official state media called this policy an upgrade of silver from common commodity to strategic resource. That's the exact same language they used right before restricting rare earth exports. Today's announcement of a multi-country trading bloc is a direct counter-move. Look at who the top silver mining countries are: Mexico, Peru, Chile, Australia, Poland, the United States. These nations all benefit from higher silver prices. If they join this alliance, the majority of mine supply ends up inside a price floor protected system, while supply from outside the bloc faces tariffs. This isn't a trade dispute. This is economic warfare. 2 days before this announcement, the White House rolled out Project Vault, a $12 billion stockpiling initiative for critical minerals, $10 billion coming from the Export-Import Bank, 15-year financing term. Private capital came in oversubscribed. The participant list includes General Motors, Boeing, Stellantis, Corning, GE Vernova, and Google. Google's involvement makes sense when you realize AI data centers consume 3 times more silver per server than conventional systems. This isn't theoretical planning. This is active preparation. Look at what silver has done price-wise. It went from $31 in January 2025 to $120 in January 2026. Then it crashed 27% in one day. Then it bounced back to $90 within days. You only see that kind of violent price action in assets that civilization literally cannot function without. Banks are divided on where this goes. Some analysts are calling for $150 in the near term. Others are warning about irrational mania. The reality is, you can have extreme volatility and fundamental structural shortage happening simultaneously. Policy-driven changes don't behave like speculative bubbles. Policy establishes support levels. Is $1,000 silver a certainty? No. Is it mathematically feasible? Absolutely. Getting there would need substantially higher gold prices, a tighter gold-to-silver ratio, and ongoing supply deficits. But $300 to $500 this decade is a legitimate possibility if these trends hold. What matters more than any specific price target is this fundamental shift. Before this announcement, silver had theoretically unlimited downside risk. Now there's a policy backstop combined with industrial necessity. Downside gets influenced by government intervention. Upside gets driven by physics and industrial consumption patterns. And circle back to that 30-year information blackout on military silver usage starting in 1996. Missiles, naval vessels, aircraft, radar systems, communications equipment. None of that consumption shows up in publicly reported deficit numbers. The actual deficit could be massively larger than what gets published. Let me list out the facts. 5 consecutive years of supply deficit. Chinese export restrictions. Critical mineral classification. Section 232, National Security Authority. $12 billion stockpile program. Tariff-enforced price floors announced to 50 nations. Massive concentrated short positions. Unreported military consumption. These are all documented realities pointing the same direction. Short-term price swings can still wreck leveraged traders. But long-term, governments don't build strategic stockpiles and implement price floor mechanisms for metals they expect to crater in value. They do it for metals they absolutely cannot afford to lose access to. Next video, I'm breaking down the specific reference price levels being discussed behind closed doors, and what they signal about where the floor gets set. Make sure you're subscribed so you catch it. Leave a comment with where you think the price floor should be. 100? 200? Higher? Get this video shared because most people still have no clue this happened. By the time the mainstream financial media picks this up, the market could already be reacting. Catch you in the next one.